The first panel is discussing the role of innovations in enabling inclusive financial services. And these are our panelists. We have Paul Zaake, is the Managing Director of AgriShare. Please come and take your seat. The next, we have Matia Ssebiranda, is a Marketing Head at FutureLink Technologies. Next, we have Stephen Kakooza, is the founder of Kawu Financial Services. Next, we have Kenneth Oburu. He is a portfolio manager at aXiom Zorn. Next, we have Chrispinus Onyancha, and he's the co-founder of clinicPesa. And this panel is going to be moderated by Flavia Eleanor Kasenge. She's a FinTech dinosaur, and she's a Chief Operations Officer at EzeeMoney. Okay, thank you so much, and I'll hand it over to you, Flavia.
Good morning to our panelists, and ladies and gentlemen, good morning to you all. As I've been introduced, my name is Flavia Eleanor Kasenge. I'm the CEO at EzeeMoney, but also I'm very passionate about FinTech. This morning, we are talking about innovation. And let me start by saying, I know you've all seen the evolution of FinTech. Over the past 20 years, technology innovation has driven the extraordinary explosion of progress. In about 2005, most of the industries that were leading the sector were mainly maybe banking, we had energy, we had consumer and goods, and some of those companies are Walmart. We saw the likes of Walmart, General Motors, Ford, General Electronics, and later on in 2015, we also saw the FinTech starting to crawling slowly but surely. We saw Apple getting in, Google, and all of these are using innovation. And now, in 2024, 90% of the companies that are driving this market are FinTechs. I guess you all agree with me. So ladies and gentlemen, today, if you get back home, gone are the days when you used to have to wait for a postman. You look out of the window. Some of us were in boarding school. We used to look out of the window just to see when is the postman delivering my letter with pocket money from my parents. Gone are the days when we used to queue up, like in a banking hall, at the comfort of our home or here where you're seated, you're able to transact. You're able to send mobile money to anyone. And really, it's mind-blowing. So ladies and gentlemen, I would like to introduce to you our panelists this morning, the experts that are going to help us tackle this topic and help us understand it better from where we have come from to where we are today. So the experts seated here today, I would like you gentlemen to introduce yourselves in 2 minutes. And please tell us a brief profile about your company and yourselves. Thank you.
Good morning, everyone. My name is Kenneth Oburu. I work with aXiom Zorn as the portfolio manager, and I'm happy to be part of this panel. aXiom Zorn is a data service provider that is looking at information at the community level to collateralize that into what other financial service providers can use to extend credit to mainly farmers and small businesses. But we don't stop there. We also leverage the information we collect to better the areas of their work, basically. Thank you.
Over to you, Kawu.
My name is Kakooza. I build awesome things at Kawu. So what we basically do at Kawu is we are building financial tools for youth with a unique focus on those in school. When you look at it, majority of us spend an average of 15 years in school. And for those 15 years, there is absolutely zero access to digital financial services. So this means that after 15 years, your child and mine will have zero financial history, zero financial knowledge, but most importantly, zero savings on their name. So what we decided to do is to build a way for these people in school to easily, affordably access digital financial services. So to put it simply, what we do is we give credit and debit cards to young people, especially those in school, to be specific, those in secondary and universities, and they use these cards to save, make payments, and also make money transfers. So you can look at us as a mobile money and a banking service that basically does not need the other party or the receiver to have a mobile device or a bank account.
Thank you.
Good morning once again, ladies and gentlemen. Onyancha Chrispinus, the CEO at clinicPesa. So at clinicPesa, we, of course, we're out to solve one major issue, which is access to healthcare financing. Many people today don't have a form of insurance, a form of actually clearing their bills when it comes to medical bills. clinicPesa looked at a gap that needed to be closed and provide members with a way of actually planning early in time so that can actually finance their healthcare bills in the form of, we do it in a simple way, in a form of savings, loans, and payments. Yeah, of course, with more innovation included. Thank you.
My name is Paul Zaake. Zaake means fire, but today there will not be fire. I am co-founder and as well managing director, AgriShare Uganda Limited. At AgriShare, we operate a digital platform called AgriShare app, and we enable farmers to hire or rent tractors, irrigation pumps, maize shellers, farmland. You can rent land for 1 year, 5 years, 10 years. You can hire irrigation pump for 1 day. But we also as well allow people who have idle resources, like if you have land, maybe in Kabera Maido, you are not using it, to list it on the AgriShare, and then other people can use it. The whole aspect of it is the fact that in Uganda, of course, many people are doing farming, except here in the room, many people may not be doing farming. But outside there, over 60% do farming. But many of these still deal this low due to lack of equipment and resources. Just 1% of people are irrigating the crops. Less than 1% of the land even use equipment like tractors. This is how we come in to ensure that these farmers can access these resources and equipment digitally, and they can pay even digitally as we shall shown. Thank you.
A very good morning, ladies and gentlemen. My name is Matia Ssebiranda. I head the marketing department at FutureLink Technologies. So FutureLink is a community-driven marketplace for affordable financial services. We offer a two-sided platform. So on one side of the platform, we enable circles and microfinance institutions that desire to grow profitably to be able to, one, acquire, serve, and retain customers, but also be able to mobilize community savings, be able to, again, reduce operational costs to over 90%. So unlike the other technology companies that only give you technology, we are able to also help through now our AI and data analytics to help circles and MFIs to drive strategies that can drive growth in their institutions. Then on the other side of the platform, we enable the consumer now to access and choose the most relevant and affordable financial services. So unlike legacy banking, our collaboration with financial cooperatives enables the consumer to access services designed just for them.
Awesome. And all this is through innovation. So our topic this morning, as we mentioned earlier, the role of innovation in enabling inclusive financial services. So let's get into that conversation. Without mentioning your company, think about any top 5 FinTech companies in Uganda that you feel have really, done the innovation work right.
Okay, aside our company, I think one of the innovations that have stood out lately in the country is one of our partners, New Grid, that launched the first ever SACCO score and mobile score. So for the very first time, members of circles are able to build credit profiles that can be shared, but also these can be relied upon by the circles to be able to lend to members without collateral security. So it shows how a member has been behaving financially over a period of time, and then they are rated based on that. So based on their scores, I can choose to say, okay, Matia can get a loan of 1 million, which is unsecured. So this includes a number of people that were actually previously excluded because they don't have collateral or they don't qualify for loans because of having no profile at all. But on the other hand, also the mobile score that is being utilized by the telecoms to also leverage the data availed by the MNOs to be able to allow people to now access more finances in terms of loans and any other financial services using the mobile credit score that was developed by our partner Neogrid. Allow me also just to mention, just beyond our country, because fintech and innovation is not just in Uganda. Lately, I saw an innovation by M-Pesa, which is M-Pesa Tarifa. So what it does is, for the very first time on a mobile phone, a member is able to automate their transactions. So you can automate recurring bills like utility bills, school fees. You can automate even rent, monthly allowances. And these innovations are really intriguing because for the very first month of this innovation, it was able to move over 366 million Kenyan shillings. And this shows that a number of people are being excluded because think of an elderly person who feels I cannot regularly use my phone because of age. So they are able to automate their transactions, and throughout the month, they are able to meet their financial obligations. And also think about other people who are incapacitated in one way or the other to effectively and frequently use their mobile devices. This solution is able to bring them closer and include them in the financial services.
Thank you. The next gentleman.
Thanks so much, Flavia. So on the fintech side, we have, of course, the top ones who are the dominant ones. Of course, there is Airtel, Money, MTN, Momo, who are dominating, or even FlexPay or Center Mobile. Of course, based on their infrastructure, I think they have done some great work when it comes to providing the structure for payment. But then what we are seeing is the other services. When it comes to insurance, credit service provision, when it comes to providing loans, when it comes to providing things on credit, there are many other startups who are doing great work in addition to the other top ones. Thank you.
I would say, of course, innovation starts with small things, They are the enablers that the telecoms like MTN. But then when you look at the space of capital markets authority, there are also innovations in there, like Zeno. I've seen Sanlam has done a good job. They've come now digital, And then when you look at the side of insurance, we are seeing that insurance companies are also coming digital, typically innovating to reach the customers from a sense of where back then you had to do paperwork, and then you had to place in claims as a healthcare center. And then also when we look at the aspect of accessibility, we're seeing kind of innovations to like partnerships coming in place to innovate and create extension. We didn't see back then card systems actually coming into the fintech space. So we are seeing innovations happening in the card systems, where we are seeing players like InterSwitch innovating and coming into the fintech space, enabling like fintechs to typically look at the dimension of banking as well, or the element of accessibility and usability of the services that they're actually providing. Because originally it's been either you have a mobile phone, or you have a SIM card, to be able to extend this service. But now we are seeing that we are typically moving away from that, the same way from, we are creating an extension whereby we will see cards coming in, and then other forms of payments, what they call swipe to pay or tap to pay. You know, we'll see people innovating by creating handset kind of tap to pay devices, you know, and that's typically for me innovation when I look at it from where I stand. Thank you.
Yes, Stephen.
Thank you, Flavia. I think for me, for the past 5 years, really, I can't pinpoint to a company that has innovated that much, that has innovated something that actually inspired me that much, for sure.
Oh my
But there are certain concepts that are amazing. Like, I'm trying to be truthful to you people. I can't look back 5 years and I say, okay, these guys have built this groundbreaking technology. Zero. But there are great concepts like peer-to-peer lending. I don't know a player in Uganda that's doing peer-to-peer lending, and I strongly believe that this would make access to credit faster and affordable. We're not doing it. If you know anybody, you can hook me up to them. So I genuinely might not have the best answer for you because I
You're
have
not
zero.
yet there. You're not
Yes.
yet, you know, no one is speaking to your heart yet.
Exactly. I don't feel
Okay.
like we are innovating enough. I don't feel like we are pushing the limits.
So we have a lot of work to do to make Stephen feel like, you know, Uganda is getting there in this innovation space. Yes, over to you.
Yes, thank you so much, Flavia. I think I share the same sentiments with my colleague over here, but obviously there are some that have done amazing work. You may not know, they may not be very common around the urban places, but they are tech service providers. I would mention of Akelo Banker. I think they've done some amazing work because they are into these communities and ensuring that they understand the needs of these people at the local level. I would also mention, obviously, we have the ones whom we ride on to see how they've perfected their applications, like MomoPay, like Airtel Money. Then I think for the service providers that have, I could say, I could speak looking back at what aXiom has done. I would look at he mentioned the one that uses data to collateralize farmers and help them extend services. I think they've also done amazing work, basically. So, yeah.
Oh, thank you very much. I actually thought you were going to mention EzeeMoney at one point so that I can, you know, be proud. But anyway, we are getting there. So my first question would go to you. So, Kenneth, how do you address the issues? Okay, in the financial inclusion space, we have many issues. So how would you address some of the issues that we are facing in Uganda today in the inclusion space?
Okay, thank you so much for that question. And I think this is a question that most tech service providers first have to appreciate before they go into the development and putting together the technology that they want to put forth. From our perspective, I believe that there are three key elements that cause exclusion of people from the financial industry. That being structural issues. Then we have, of course, accessibility and then affordability. So to look at how such can be addressed, I would think, for example, in terms of affordability, what brings about the cost of capital going that high is the rudimentary way that they have to extend the service to the farmer. Take an example, if you have to go deep down to a village in, let's say, Bukwo, you are a bank or a financial service provider that is based in Mbale. You'd need almost, you'd have to cover over 64 kilometers to get to the client. But if we have these digital solutions at hand, that means that you would cut down on the expenses that you would incur to extend that service, for example. So basically that reduces the affordability. If, for example, you have a data service provider, enriching you with the information that you would require to evaluate that person's viability or feasibility to work with them. So in the technology space, I think we are working so hard to ensure that there is affordability at the end of the extension of the service. Then to do with access, I think you will agree with me that the rural setting, for example, has about 76% of the population of Uganda. And most of these people are obviously excluded from the services because they are unbanked. So when we have, like for example, for aXiom Zone, we developed the digital empowerment card. It's a card that carries information of a potential client to a financial service provider, where if they need a service, let's say like credit to enhance their productivity, it's a matter of them carrying that card. They swipe, and every information that is at their community or that is at their area of production can be retrieved, and they can be evaluated to extend that service to them without the need of having to take a personal banker or a credit officer down there and evaluate the entire process. So I think that talks to the accessibility. Yeah.
Thank you very much. And definitely, of course, the mindsets of people. I think you need to agree that we have a lot of work to do to be able to get everyone included in this. Okay, please go ahead.
One thing as actors in the digital space, we are seeing is that we are going into the virgin areas when it comes to digital populations. For us who have been working with the farmers in the rural areas, many people are even not aware or even trust the ability that if you deposit money on mobile money, it will reach where you are sending it. Yeah, sometimes they want to physically see the receipt. They want to physically give the money out to somebody. And it's not a challenge of just for Uganda. We already know that about 1.5 billion people worldwide, they don't use any mobile money payment. They don't use any bank. In Africa, it's over 70%. In Uganda, of course, we are doing relatively better due to maybe telecom companies and mobile money. It's almost 30 to 40% we are not using. But the challenge is still there when it comes to rural areas. Majority of people don't trust the digital payments. So yeah, there's that challenge of the need for awareness.
Okay, thank you very much. And over to you, Matia. I think before we dig very deep into this conversation, what would you say inclusive financial services are? Maybe to help our audience understand it better.
Thank you, Flavia. So for me, inclusive financial services are these financial products and services that, first of all, give a chance for a choice. One should be able to choose. They should be affordable. They should be relevant. And they should be factoring in an inclusion of all people. That means low-income earners, women, and smallholder farmers, everyone inclusive, and their needs are able to be taken care of in this space. So the idea is to really have everyone have an equal opportunity to play in the financial ecosystem. They're able to save, they can insure themselves, they can borrow, and this is really what is able to bring about economic stability. So a typical example is, for example, I want to give an example of M-Circle. M-Circle enables the consumer to access and choose the most relevant and affordable financial services. So for the very first time now, a member of somebody who wants to join a circle can be in Karamoja, and just using their mobile phone, they are able to choose a circle or an MFI that speaks to them, look at their profile, look at the kind of services they are going to offer to them. And if they are affordable and they are relevant to them, they're able to join this institution from wherever they are remotely without having a physical interface. So this, in a way, is able to allow access to capital. It is able to allow people to grow their saving culture. It is able to allow people to, we had a case in Western Uganda where, there was quite some kind of home violence, domestic violence, where a man did not want to see his wife in a banking hall. In a moment that the woman goes to the banking hall, the man thinks this woman has a lot of money, and the time she returns home, there is violence. So with M-Circle, this woman now is able to, just on their phone, now be able to access the financial services without having to interact with humans. and also exposing herself, but also taking away the risk of, carrying cash for long distances, going to the banking hall, and any other associated risks. So I believe that financial inclusion should be able to cover all those areas and take away all those risks.
Thank you. It's really so sad, but it still happens even in the rural areas where you see men still wanting to control women. Like you've mentioned, entering into a banking hall can become a disaster for the wife. So we really need to do a lot, again, to change people's mindsets. I think that is where we need to start from. How are we able to penetrate into people's mindsets to be able to, get them to where we are, where we think we are going, and to be able to see what we see in the future. Over to you, Stephen and Chris. From where you sit, how do we move from mere fintech innovation to the last mile financial inclusion?
I want to put it as humble as I possibly can, but I think building for the last mile people is hard. It's very hard for you to build for somebody who lives on $1 a day.
Yeah.
You cannot get more than $1 because that's all they have. And we've experienced this firsthand building for students. They have a cap, they have a maximum amount of money they can spend in a day. So you cannot get more than what they can spend. And every business is built first to make money and then impact. So you have to be very deliberate on how you deliver your product to these people such that it's very cheap to you, the provider, in such a way that you can then give back some of those benefits that you have saved back to the consumer. So when you set out to build or innovate something for the excluded, this is something like I've already shared, that when you start building for the unserved and the underserved, you realize why they were unserved or underserved in the first place. That is right after you start serving them. So you have to be very, very deliberate. And I think the best way to do it is to start with the people who have the money, get that money first, and then you can give it back or remit it back to the underserved. Because you're going to try to serve them, like you might try as much as you can, but the first goal is survival. If you have 100,000 and that's the only money you have to survive, to serve these people, you're going to burn through it. And then at the end of the day, you'll have to shut down, and then you won't be able to serve even the people you want to serve. But if you can get the people who have the money, the people who are seated in this room, unfortunately, they already have access to most of these things. But if you can get to them, get some of the dollars they have, then you can use these dollars to serve the underserved or the unserved. That's the way I look at it. I might be wrong, but that's the brutal truth. It's ridiculously hard for you to just build a product for somebody who cannot buy it in the first place. You have to, first of all, get a way for you to sustainably deliver this product to them. And then two, and what I think is very useful, is to understand that it's not about enabling them to spend or give you money, but it's you to figure out a way to enable them earn. Let me give you an example. We are building a product that the flagship product is payment. That is canteen payments, that is a parent transferring money to their child in school. But we saw that it is not sustainable. A student spends an average of, 3,000 a day? And you cannot, from that 3,000, pick 500. It doesn't make sense, So we, instead of just focusing on the way of getting 2,000 out of 3,000, we are figuring out a way to help the student use the remaining 2,000 to actually make an extra 1,000. So to me, that's sort of, more important for us to figure out a way to help the underserved or unserved and from the little they have before we can actually get from them. And you can only do that if you have the horses. So if you don't have the horses, you really can't go that far.
Thank you, Stephen. I think you've spoken from a point of experience. You've been in the field and you're speaking from your points as well. Like, trying to sell to someone who, one, the mindset is one of it, but also the fact that they are not able to afford the product. Maybe we should be able to think about what we are innovating. Are we innovating for the right people? Yes, over to you, Chris.
Okay, thank you so much. I would speak about the building for the last mile. It's quite okay. It's a wide conversation when you talk about building for the last mile, but I would tag it back to the theme today, which is typically innovation. So when we're talking about building for the last mile, we're talking about more services that would be built would actually be targeting major towns, Central Region, Kampala. But then I would look at building for the last mile as someone accessing medicine. So the person in Central Region and the person in the Northern Region all need the same service. Of course, the mindset is that, of course, we are cognizant of the purchasing power. The purchasing power in up country would not be the same purchasing power in the Central Region. But with that in mind, as we're saying, building for the last mile, because last mile means going beyond the regions that have a high purchasing power. You want the person in Karamoja to also be able to use your service, So to me, it's a game of numbers. That's the first thing. The game of numbers is that you build a product that is very affordable. A product that is very affordable. Today, the person in Karamoja would still send money on mobile money because it's affordable. Because it's when it was designed, it was not designed for the person in the Central Region because of their purchasing power. So I'll look at it from a perspective of, look at the game of numbers, because someone has to pay for someone, or someone has to subsidize for someone. It's the same system or the same technology that is accessed in Central Region that is accessed the other side. So the cost that comes up with you serving the members in the low purchasing power area is actually being absorbed by the high purchasing power areas, So, but of course, pushing it back to numbers, if you're building for, let's say you're building for 100,000 customers, then it means that it will be very hard for you to be able to move up country, You first need to grow from the high purchasing areas, so that because you need to finance the bills, you need to pay for these servers, you need to pay the staff, you need to pay, you need to pay all the costs that come with building for the last mile. But of course, also when you look at the market, there's what we call market facilitation. There are institutions that their work is to empower those communities to actually create a sense of business activity. So starting with government, of course, government does a good job in the sense of empowering. By the time they're actually pushing money to the communities, in the small communities, to be able to create like business activities, those business activities, they will need the same services that you're accessing in Central Region. So when we're innovating, we think about the cost, because as you think about the cost the same cost is going to be paid by the person in upcountry. Then we are thinking about the accessibility, the channels. What channels are you pushing out? Collaborations. Of course, collaborations brings down the cost. Instead of going to build an agent network in upcountry, you could potentially use an agent network that has already been established. And that is how you're able to reach in the hard areas, like areas where you need to invest more, you invest less, so that you're able to extend the service up country for customers who live in up country to be able to access this. It's the same thing as medicine. The person in Kampala will take the medicine, and the person in up country will take the medicine. Yeah.
Thank you very much, Chris. But all in all, I think we need to look at how to customize what we are innovating as well.
Yes.
From what you're saying. To you, Matia and Paul, in less than 2 minutes, from what Stephen and Chris have said, what factors, unique factors, should we put in place to be successful while innovating?
First of all, I think we need the first factor is also simplicity. Making money is hard. Just imagine if a farmer goes growing crops for 3 months, then at harvest time gets 100,000, then you make it complex for this farmer to either send it to school, either to deposit it somewhere, either to pay for an insurance. So there's the need of that is simplicity. The second factor, it can come on the security, which is also built on the trust. I think the whole success, and this is very critical, is that many times as startups, we are reluctant to establish the systems, the processes, the technology, the teams which can ensure the security of the money of the people. We've had scenarios, even amongst big FinTech actors, where security is still one of the top risks. So one of the key factors is ensuring the security. Then another one is on the service excellence. One thing I'm realizing amongst my customers, we have very many customers spread across the country, is the fact that it's changing from the way we started. Nowadays, our customers tend to communicate to each other. You find one farmer talking with another farmer. Even if the service is good, they'll talk to another farmer. They will not come back to talk to you. Service is bad, they'll talk to another farmer. They'll not come back to talk to you. So ensuring service excellence is very critical. Of course, that one is also critical because when a farmer talks to another farmer or your customer talks to another customer, it means it will be like indirect marketing, referral, and that is the easiest way of getting customer and build your FinTech and scale it up. I think those are the three: simplicity, security, and service excellence.
Okay. As you mentioned that you talked about trust, maybe what we need to ponder about as we live here, how do we gain trust or earn the trust for the people that we are talking about? Yes, over to you, Matia.
Thank you, Flavia. I think on my side, I would look at, first of all, do not go in all alone. Yeah, so you need strategic partnerships. So for example, what has helped us at FutureLink is having this robust platform. We do not do it alone. We have a number of partners that understand our strategy, that understand the customer that we are serving, that understand our mission and purpose, and they are committed to delivering to this mission and purpose. So, for example, our platform is integrated with NIRA. It has integration with MTN, Airtel for the M-Circle part of it. It has integration with CRBs. So we are able to offer an all-round solution to the customer in just one platform, which enables them to access everything in just one centralized and secure platform. So when you have strategic partnerships, you're sure that you're able to actually go a long way in achieving success as an innovator. And then the other thing we look at is also the regulatory framework. So for you to be able to, there is a risk of, when we're growing as startups, there is a risk of neglecting regulation and compliancy, and you feel, I can do away with this anyway. So the first thing you look at is, how do I actually keep coping with regulation and compliancy as I grow as a startup? Because you saw, I think in July, when Bank of Uganda sent out a notification to those that are in payments and they are not licensed, and services were going to be terminated. So imagine that you're being served by somebody who has no license, and then a period comes and they are terminated, you lose the service, and along the way, maybe you acquire the license and you come back and explain, you see, we didn't have a license, now we have come back, so you lose the trust, like Paul has been saying. So it is important for us to keep in check and also be able to understand that in future, policies keep, changing day and night. And of course, we remember 2021, Bank of Uganda launched the regulatory sandbox, which is able now to help, fintechs to be able to innovate and iterate once in a while, and also be able to secure the customer. So we have to be mindful of this, and as we pivot forward innovations. Thank you.
Thank you. It's very important for us to collaborate. Gone are the days when we used to look at ourselves as competition. We need to find out what the next door neighbor has, and we can tap into that to make innovation very awesome and beautiful to the people who are out there. And then to you, Kenneth, yes, you can submit also, but the question, what advice do you have to the young innovators, the people out there innovating in the market? What advice do you have for them? But you can go ahead and substitute.
Okay, thank you so much. I think it also aligns well with what I wanted to just make as a submission to what they've already shared, is that the young innovators, usually when they're starting off, they look at themselves and may disregard what already other players in the ecosystem have done. And when you speak about collaboration and trying to look at success as something that you can achieve by ensuring that you have some sort of partnerships with already people who are existing in the ecosystem, it becomes very easy for you to, first of all, I would give an example of the wealthiest man on the planet currently, Elon Musk, who had an open access to his EV patent. So BMW came in. It allowed him to create acceptability, for example, to validate the technology. So if you're going to work with the communities, for example, I am a service provider using data. I offer data service. You don't need to have to go out to the communities to create another network of agents. If you can piggyback on my network of agents, if AgriShare can piggyback on my network of agents, we can achieve together. So I think as innovators, you're not going to bring something new out of the blue. There are already some people who are existing in the industry who can help you build from what you basically fill the gap on what is missing, basically. Yep.
Thank you, Kenneth. Can you imagine 20 years from now, you'll be talking about Flavia Kasenge Eleanor as the richest lady in the world. Thank you very much to our panelists. We really appreciate your knowledge and expertise that you brought up today. Thank you to the beautiful audience. And yes, this is the end of our session. Thank you very much. As we innovate, we have to innovate for everyone, not just for the upper people, but we also have to look at the underserved people. Maybe we need to study them more and get to understand what services they can take. That will help us penetrate into their market quickly, because we also need them. As we get onto this wagon of innovation and we are moving very fast, we have to think about the underserved people. Okay, then thank you very much to Matia. Thank you, Stephen. Thank you, Paul. Thank you, Kenneth. And to you, Chris, thank you very much for your expertise. We appreciate you.